Maarten-Jan Bakkum thinks. He is a global emerging market strategist at ING Investment Management. He joins us from The Hague. Thanks very much for being with us. So tell me, is it time to buy into emerging market stocks? Have they reached a bottom?
Well, we also think that it's probably a bit early to buy back into emerging markets aggressively. Markets have corrected a lot, of course, but I think also for good reasons. It's mainly growth concerns that have been pushing equities down globally. And emerging markets equities, of course, are extra sensitive to global growth through the trade link, through the commodity link, and also because of capital flows that have been very strong in the last few years, but could also come down a lot.
So when is it time to get in, and exactly where should you go? How do you choose? Do you choose via the country that you're going to invest in first and then look at the sectors? Is that how it works?
Well, you can. I think on the country side, it's probably the clearest. You can make differences the clearest. Some countries have more room to stimulate economic policy compared to others, and there's still the problem of inflation in emerging markets, which makes it difficult for a group of countries to loosen policy in an environment where global growth is still coming down.
So this is the main difference you're saying with emerging markets as an investment prospect compared to a year ago, is that now these governments have a lot less flexibility when it comes to monetary policy or indeed fiscal policy. So who does have the most flexibility, and is that where you want to be?
Well, yeah, I guess that's true. It's a big difference with 2008 when China, Korea, India, all these countries were able to stimulate policy big time. But at this time, I think still China is a country where economic policy could be loosened most. Not through the monetary side this time, but on the fiscal side, the Chinese have quite some room. So we do expect more investment programs to be put in place. Other countries in Asia have also a bit more fiscal than monetary room. But the main problem, I think, lies in Latin America, where there's very limited room for fiscal easing and also for monetary easing.
You've also got some concerns, haven't you, about Turkey, about Brazil, about South Africa. Just tell us what the main problem is there.
Well, these three countries are countries that need a lot of capital still to keep growth at high levels. And I think at this point, with global growth concerns still getting worse probably, risk appetite globally is fragile. And we've seen a bit of a recovery in the last few days, but I think the direction for markets is still down. And one of the last things that have not really moved a lot is emerging currencies. And we all know that the euro and the dollar are maybe fundamentally weak for the next few years, but still a lot of these emerging currencies have reached very high levels, and I think there is a lot of downside for particularly the Brazilian real and the South African rand.